As requested, I'll be briefly covering charts and analysis in regards to trading stocks and cryptocurrencies. Investing and holding, of course, differ from day trading and swing trading. With investing, for example, you may simply contribute your maximum $6,000 a year to an IRA that consists of index funds like SPY, because they basically grow by a certain percent on average almost every year for basically decades now. An example of holding, at least in my case, could be AMD. Back when AMD was only $60 per share, I talked about how I think it will reach $200 to $300 in possibly a year or two. And now, about 1 year later, AMD has climbed from $60 to $211. My reasoning for holding AMD is that it continued to grow and set new records, and I felt that it was always undervalued, especially during a bear market, which I knew usually turns into a bull market. So it was basically fundamentals and macroeconomics that are being considered in these two examples. Now, if you look at the chart of SQ in the background, you notice those nice mountains. I actually recommended and swing traded SQ however many times during that time frame, and that's pretty much exactly why, is I noticed the chart had a strong support and resistance level. So when it reached the support level, I bought it, and when it reached the resistance level, I sold it. But don't forget that patterns eventually break. At any point, SQ could have moved above resistance or below support, in which case I would have to sell or average down. But because it was undervalued, in my opinion, and we were starting to get a bull market overall, I figured it would break higher if anything. And it actually did move a lot higher, but that was because of a good earnings report. And that means a bad earnings report could have tanked it. And that's why you have to pay attention to catalysts, whether it's news about the stock or even economical news, like the day that we get the inflation reports. A few weeks ago, I bought and recommended Mara when it was at its support range because it was at support and Bitcoin was starting to move higher again, and Mara had earnings that next week, which usually brings some hype. I'm not saying to gamble on the report, but sure enough, right before earnings, it skyrocketed from $20 to $30 per share. Next, look at this chart of Apple. Apple has been trending down for weeks, but there were 5 to 7 occasions where Apple would dip and then bounce, making it appealing to buy the dips and then sell the bounces. However, that's not really safe because it's on a downtrend. There were occasions where it kept suddenly dropping even lower than expected. So really, it would have been safer to short the bounces and sell the dips. Because I was watching it every day, I noticed a lot of days it would drop by about 1% in the morning, and then rebound by about 0.5% that afternoon. So there were days where I would buy a call option when it dropped, and then I would day trade that call option when it bounced, which would of course work with shares as well. Apple probably will recover at some point, so you could buy it and then average down and buy more if it drops again after that. That would be kind of swing trading, but it could turn into a hold that way. Some people actually use the minute by minute or hour by hour charts, and they also use indicators like the SMA line to help them, especially and mostly when they day trade, although there are other uses. In my case, I don't really do that. I don't even use the candlesticks because I'm already pretty much doing it instinctually. Side note, just for fun, UNG here is actually an ETF that follows the performance of natural gas, the commodity, or at least contracts of it. You do not want to try to study the charts or indicators here at all. Following natural gas is the only way to actually trade UNG correctly, because the charts and indicators have nothing to do with its value at all. Everything I've talked about also applies to cryptocurrency, although in some ways, crypto will operate differently, like a lot of altcoins will react to whatever Bitcoin is doing, and some of the economical data won't really affect cryptocurrency, since crypto can kind of be a haven from stocks at times. I somewhat recently swing traded AVAX, buying it at $30 per share and selling it at $40 per share. That was because I knew that was the broader support and resistance range, and at a macro level, I knew that I could simply buy, average down, and hold if necessary if I was wrong, because the next crypto bull market was clearly around the corner, which is indeed occurring now, and AVAX is even higher than its resistance from before. Nowadays, Coinbase offers advanced trading features like indicators on the chart and candlesticks instead of lines, which is nice, because that is useful to learn and can help a lot.